Hello, and welcome to the Commonwealth Financial Network February Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. January was a great month for stock markets. Around the world, markets as a whole rose. The U.S. did well. In fact, emerging markets and international markets actually did even better than the U.S., which is something we haven't seen in quite a while. So from a financial market perspective, the world is actually in pretty good shape, which is a very good thing. And that's actually a very good thing for the year as a whole. There's a stock market rule, if you will, called the January effect. And it says, as January goes, so goes the year. We had a very good January. That augurs pretty well for the rest of the year. And although, of course, we can't count on that, it's nice to have that indicator on our side. Does this make any sense? It certainly does. Because here in the U.S. and around the world, we have the economy continuing to grow. In fact, we're seeing the first synchronized global expansion since the financial crisis. Here in the U.S., growth continues to do well, but the problem is that even as growth is continuing to accelerate, it's not quite keeping pace with expectations. Expectations really moved higher after the election. And they're starting to pull back a little bit, which is something to keep an eye on, but probably just a healthy normalization. Nonetheless, what we're seeing is a gap between expectations, which are very high, and the actual results, which are good but not great. And we need to see how that gap closes. Right now, I think the sense is that we're still going to see the fundamentals move up to expectations. In other words, our hopes are going to be fulfilled, but we don't know if that's going to be the case. And one of the real concerns we have with that is the news coming out of Washington, D.C. Particularly in the past couple of weeks, we've seen the kind of conflict in D.C. that many hoped we had put behind us with the election. In other words, last year and the years before, we had gridlock, we had confrontation, we had the government not really able to do anything. Now we may be starting to see that kind of confrontation come out again. It's not there yet, but we are starting to see signs of it. And that's something that, from an economic perspective, raises the question that some of the policy actions that the government was expected to take, tax reform, for example, or infrastructure spending that would have benefited the economy, that's something that becomes less likely. And that may be contributing to some of the moderation of expectations, and also maybe a little bit towards a pullback in the market in recent days. That's something to keep an eye on. But at the same time, what we have, the turmoil from Washington, is nothing new. The fundamentals for both the economy and for companies continue to do well and improve. Earnings, for example, are beating expectations and look likely to rise for the second quarter in a row, and for the first time in years. Consequently, even though we have concerns, that has always been the case. And when we talk next month, I fully expect we'll have a lot more to talk about, but that the fundamentals are very likely to remain positive then as well. We will see, and I will talk to you next month. Thank you for watching.